Welcome to the deep dive. This is where we try to slice through all that market noise, grab a whole stack of information, and really pull out the key insights for you.
Yeah, helping you cut straight to what matters, get ahead of the curve.
Exactly. And today, we've got something really interesting. It's a deep dive into a pretty comprehensive strategic investment reassessment. It comes from let's just say, a top-tier trader.
And this isn't just, looking at one specific stock symbol. It feels much bigger than that.
Oh, definitely. It's really more like a master class in a specific, pretty rigorous way of analyzing the market, a whole methodology.
Indeed. We're definitely stepping beyond just the ticker today. This is about understanding a systematic way to approach market dynamics, how a really detailed, multi-layered view can shape your investment thinking.
Right, and elevate how you see market cycles, maybe.
Exactly. It's a fantastic example of finding that real signal amidst all the constant chatter, the static.
Okay, so our mission today, let's unpack this super detailed analysis of supermicrocomputer, SMCI. And we're doing it through the unique lens of this trader, JinLog.
Right, and they have that intriguing description.
Yeah, Alpha Mega Market Start and Insight. We're going to try and pull out the actionable stuff, decode the jargon they use.
Specific terminology, yeah.
And really get how all these different pieces, chart patterns, financials, even like online community, buzz how it all feeds into a solid investment strategy.
And I think this is really valuable because it offers a structured alternative to just, reacting constantly.
Reacting to every headline, yeah.
Exactly. Instead of just bouncing off every news bit or price swing, JinLog's framework gives you a guide. It's about finding the why behind the market's what, a systematic way of thinking you could apply anywhere, really.
Developing foresight, not just hindsight. I like that.
Precisely. It's setting the stage, introducing JinLog and their investment philosophy.
Okay, so let's start with the source, this trader JinLog. The reports authored by them, described as a top trader. What should we really understand about this persona, this approach? Especially that market start and insight claim, the alpha and omega thing.
Well, what jumps out immediately is their opening statement, their philosophy. It really pushes back against a lot of modern trading hype, they say. Reacting to every piece of news and overtrading will erode both your capital and your time.
That's a strong opening.
It really is. It's not just casual advice. It feels like a core principle. In today's world, news breaks instantly. Social media amplifies everything.
There's pressure to always be doing something.
Exactly. A huge urge for retail traders to react constantly. But JinLog champions the opposite. Discipline, patience. They argue that all that reactivity isn't just tiring, it's financially damaging.
How so?
Well, think about it. Excessive transaction costs, bad decisions made in the heat of the moment, fueled by emotion. It just drains your capital and, frankly, your mental energy.
So resist the urge to act constantly. It's about stepping back from the noise, not diving into every ripple.
Precisely. Discerning the signals that actually matter.
And that name, Alpha Omega Market Start and Insight, it suggests something deeper than just reacting to daily moves. What does that start-hand perspective really imply?
It implies, I think, a really holistic grasp of market cycles, a deep sense of where a trend really begins, how it plays out, and crucially, when it's getting exhausted, signaling a potential turn.
So not just chasing quick profits.
Right. This isn't about scalping or chasing tiny moves. It's looking at the market through the lens of these larger, maybe even cyclical patterns. The alpha, the beginning, recognizing trends early, before the crowd catches on.
The omega.
The omega, the end, that's spotting the turning points, potentially getting out before the herd gets caught going the wrong way. It's a patient, analytical approach, very different from the rapid-fire stuff you often see promoted for day trading.
Which can seem exciting, but maybe isn't sustainable for most people.
Well, those tactics can work sometimes, but often come with higher costs, more stress, and a real risk of burning through capital if you're not incredibly disciplined. JinLog's philosophy is kind of a counter-narrative. Sometimes the best action is inaction, waiting for the right moment, the high-conviction setup.
Okay, that makes sense. It's about understanding the whole life cycle of a move, not just the immediate blip. So how does JinLog translate this philosophy into something practical, something actionable? They talk about the VPAR rhythm trading method. Let's unpack that. What is VPR?
Right, the VPAR method. It's presented as this very systematic, almost elegant way to manage risk while still aiming for higher returns. It's not about gut feelings. It's built on two really powerful, interconnected pillars.
Okay, what's the first one?
The first pillar is capturing overall market timing. This means looking beyond just one stock. It's about identifying the broader pulse, the rhythm of the whole market.
Like, is the tide going in or out for everyone?
Exactly like that. Is the overall market lifting everything, or is it pulling everything down? It involves blending sector analysis, individual stock behavior, and importantly, watching live index movements. JinLog mentions monitoring indices during broadcasts.
So you're swimming with the current, hopefully.
That's the idea. You
Yeah.
need that context. Are conditions actually right for your trade, or is the broader market just going to drag it down anyway? It's seeing the forest, not just one tree.
That makes a lot of sense. Get the big picture first. Okay, so what's the second pillar, the more focused part?
The second pillar, which really sharpens the focus, is zeroing in on what JinLog calls MAC points. These are defined as major support levels where news and events often become extra significant.
So not just random lines on a chart.
Definitely not random. They're critical inflection points, like strategic checkpoints or maybe even pressure zones. It's where the fundamentals, like big news, often meet strong technical support or resistance.
Leading to decisive moves.
That's the theory. Think of them as battlegrounds where buyers and sellers really show their strength. For JinLog, a MAC point isn't just where support might be, but why it's important there. It's where market structure and fundamental drivers are expected to align.
How are they identified? Just looking at past prices.
It's a combination, historical price action, yes, but also volume analysis and understanding where big institutional orders might be sitting.
Okay, I see the synergy now. The rhythm is the big picture, the flow of the river, its direction, its power.
Right.
And the MAC points are like specific spots, a sharp bend, a big rock underwater where things might change suddenly, where you need to make a decision.
That's a great analogy. It's like a sailor using both the main currents and specific navigational markers, not just reacting to every little gust of wind, which is like reacting to every news headline.
Having a map and a compass, not just a weather vane.
Exactly. And this whole systematic, rule-based approach aims to strip out the emotional bias, which, let's face it, sinks a lot of traders.
Oh, for sure. Fear and greed.
Right. And it also helps manage the information overload. You're not trying to process every single data point. You're filtering it through this VPAR lens, rhythm, and MAC points.
So for you listening, the key takeaway here is that this offers a clearer, maybe less stressful path to making informed decisions.
That's the goal. It's about giving you a solid framework, making you a strategic player, not just reacting to the market's whims. It turns trading into more of a disciplined craft. Supermicrocomputer, SMCI. A recent journey and current crossroads.
Okay, let's take this VPAR framework and apply it directly to the example JinLog uses. Supermicrocomputer, SMCI. The report jumps right into its recent pretty wild price action, a surge up to a $62 target, then a big gap drop down towards a $42 MAC point. What happened there?
Yeah, that sequence is almost a textbook example of volatility, especially when broader market algorithms get involved. SMCI shot past $62, but the report specifically says it gapped up past $62 on the Nasdaq 100 algorithm.
Ah, so not just pure SMCI buying.
It suggests a strong link. The momentum wasn't solely based on SMCI's own news, but was heavily influenced by broader tech trends and these automated strategies tied to big indices like the Nasdaq 100. When those algos kick in, they can create intense, almost automatic buying.
Driving prices up very fast.
Extremely fast, sometimes bypassing normal resistance, but then, crucially, it failed to hold.
Okay, what does fail to hold signify technically?
It means that despite that initial explosive move, maybe even on high volume, the stock just couldn't stay up there. Sellers, maybe institutions taking profits, maybe short sellers stepping in, just overwhelmed the buyers at those higher levels.
And that led to the drop.
It led to the gap drop,
Yeah.
a really sharp, often brutal fall, which the report notes was in line with a correction happening in the Nasdaq 100 at the same time.
So it fell in sync with the broader market. What exactly is a gap drop visually?
It's when the price opens significantly lower than where it closed the previous period, leaving an empty space, a gap, on the chart. It means there was basically no trading in that price range, just overwhelming selling pressure that wiped out buyers.
A sign of a major shift in sentiment.
A profound shift, yeah. You saw SMCI peak near $62, then plunge down towards that key $42 MAC point. It's currently sitting around $46.75, I believe, a big, fast drop.
So given that fall, where does it leave SMCI now? Around $46.75. JinLog suggests it may form a midterm consolidation box around $42.53. What's a consolidation box? Tell us.
Right, a consolidation box describes a period where the stock basically trades sideways, stuck within a defined range. It suggests a kind of temporary truce between buyers and sellers. Neither side is really in control.
The market catching its breath.
Sort of, yeah. Or maybe a phase where energy is being built up. It could be accumulation, where long-term investors are quietly buying, or distribution, where shorter-term holders are selling off before the next big move. It's not inactive, it's just coiled.
Coiled, okay. And why that specific range? $42 to $53.
JinLog identifies those boundaries very precisely. $42 is that swing MAC point, the key support level we mentioned, the expected floor.
Where buyers should theoretically step in.
Exactly. And $53 is identified later as a midterm MAC point for risk management. That's the ceiling, the key resistance it needs to break through convincingly to signal a real move higher.
So this $42, $53 zone is pivotal.
Hugely pivotal. It's where the stock might stabilize, build a base. And JinLog adds another layer here, suggesting this consolidation might be a trap clearing period.
A trap clearing, what does that mean?
It implies that this sideways action could be setting the stage for a big return, maybe even back above the old $122 high eventually. The trap might be for those who panicked and sold after the gap down, or maybe short sellers who jumped in too late.
So while it looks quiet, smarter money might be accumulating.
That's the implication, clearing out the weaker hands before the next major leg up. It suggests that despite the sharp correction, the longer-term outlook in JinLog's view remains bullish. Selling now might mean falling into that trap.
That's a fascinating perspective. So for you listening, understanding consolidation helps set expectations. Don't expect huge moves immediately, maybe. It's a waiting game, but within defined lines and potentially leading to something significant later. 3. Navigating the investment horizons, short-term, swing, and mid-term strategies. Okay, this analysis isn't just looking back. It gives actionable ideas based on different timeframes. This is where it gets really practical. So what does this mean for someone considering SMCI, whether they're thinking short-term, swing, or mid-term?
Right, and this is where JinLog's VPAR method really shines, I think. It's not a one-size-fits-all plan. It recognizes that different goals need different tactics. As JinLog puts it, this raises an important question. Are you looking for quick gains, medium-term movements, or a longer-term position?
A crucial question for any investor to ask themselves. Let's start with the short-term tactics. JinLog advises patience here. Wait for the post-gap down rhythm to bottom out before small tactical entries. What signals should a short-term trader look for?
The strategy is very clear and cautious. Look for a clean rhythm reversal off the gap down low, then enter small tranches. It really emphasizes not trying to catch that falling knife.
Trying to perfectly time the absolute bottom is risky.
Extremely risky. A stock that just gapped down like that is in shock. Pinpointing the exact bottom tick is mostly luck. JinLog advises waiting for confirmation.
Okay, so what does rhythm reversal look like in practice?
It means waiting for clear, tangible signs that the downward momentum is actually done and a new short-term upward pulse is starting. Not just one green candle, but maybe a pattern of higher lows and higher highs on a short time frame chart.
Or maybe a shift in indicators.
Exactly. Or seeing the flow of funds turn positive again, more buying volume on up moves. And the advice to use small tranches is key risk management.
Buying in pieces.
Right. Enter with a small position first. If the reversal fails, your loss is limited. If it holds and starts moving up, you can add more, confirming the trend, rather than betting the farm on an unproven bounce.
Very disciplined. Okay, moving to swing trading, aiming for slightly longer moves, maybe days or weeks. The advice is consider tranche buys near $42 once clear support and rhythm reversal signs appear. What's the plan after making that buy near $42?
Yeah, the swing strategy is also very precise. Once you see that clear support holding at $42 and the rhythm starting to reverse, the plan is buy portions at $42 support, take partial profits on a confirmed bounce, and tighten stops.
So $42 is the entry zone, that MEC point.
It's the critical launch pad for a potential bounce. The strategy is about capturing that rebound off a strong, established technical level.
And explain partial profits and tightening stops. For the swing trader, how do those work?
Sure. Partial profits means selling some of your position, maybe a third, maybe half, once the stock bounces and hits a certain gain target. It locks in profit, crucially reduces your risk on the rest of the trade.
You're playing with house money, potentially?
Potentially, yeah. And tightening stops protects what's left. As the stock moves in your favor, you raise your stop loss order, the price where you automatically sell to limit losses. So if you bought at $42 and it bounces to $46, you might move your stop from, say, $41 up to $43. or $44.
So if it suddenly reverses, you still protect capital or even lock in a small gain.
Exactly. It's active management of the trade as it develops, adapting.
Now, this is where it gets really interesting for longer-term folks. Midterm strategy. Accumulate around $41, $42 and increase exposure as the stock clears its midterm trap and targets a return above the old 122-dollar high. This sounds patient, but potentially very rewarding.
Yeah, this clearly lays out JinLog's long-term bullish view. Accumulating around $41, $42 means building a core position at that strong base level, the floor of that consolidation box.
Getting in at what's seen as a strong foundation.
Right. But the real acceleration, the increased exposure part, comes when it clears its midterm trap.
And remind us, what is that midterm trap?
The report defines it as breaking decisively back above $53. And ideally, this breakout happens alongside strong AI data center catalysts, positive fundamental news reinforcing the growth story.
So $53 is that key resistance, the midterm MAC point.
Exactly. Breaking above it with conviction, especially on good AI news, is seen as the confirmation. It signals the consolidation is over, the next big leg up is starting. It suggests sellers above $53 are exhausted and buyers are firmly in control.
It's the green light for the longer-term trend resuming.
That's the interpretation. And the target, a return above the old $122 high, implies really significant potential upside from where it is now, around $47.
Wow, that's ambitious.
It is. But this strategy isn't about quick flips. It's like cultivating an orchard, maybe. You choose the right spot, $41, $42, you let it establish roots during consolidation, and you anticipate the harvest, $122 plus.
So for you listening, this is for those seeking major appreciation over time, emphasizing patience and strategically adding to the position, not just jumping in and out, building for a big move.
Precisely. Leveraging that alpha omega insight into the longer market cycles.
Yeah.
Deeper technical insights. Chart and rhythm analysis.
Okay, that strategic outlook is clear. JinLog backs this up with a detailed chart explanation. We've talked about the $62 peak, the gap down, the $42 MAC point. How does the chart visually confirm these levels?
Well, the chart analysis makes it undeniable. It shows that spike past $62 on the Nasdaq 100 algorithm, then the failed to hold, and the gap drop toward the $42 swing MAC point. Seeing it visually really hammers home the volatility.
And that link to the Nasdaq 100 algorithm keeps coming up.
It does, and it's important. It suggests SMCI's moves aren't purely its own story. They're tied into bigger market forces and these automated trading flows. That failure to hold $62 after gapping up is a really strong short-term bearish signal on the chart, shows weakness despite the initial surge.
The momentum just wasn't sustainable up there.
Exactly. And the chart explanation isn't just history, it's a guide for the strategy. It points out the midterm entry at 41 wall aligns with the lower box range. Visually, that's the base of the consolidation box.
The accumulation zone.
Right. And it also marks the midterm MAC point sits at $53 for risk management. These aren't just numbers, they're clear visual boundaries on the chart. $42 is where you accumulate, $53 is the breakout point or the risk management line.
So for you listening, it's about learning to read these visual cues, understanding the story the chart tells about supply, demand, and key turning points.
It's reading the market's language, yeah.
Now, beyond the static chart levels, JinLog uses rhythm analysis. This sounds like it gets into the stock's energy, its flow, across different time frames. What does this pulse check reveal?
Yeah, this VPAR element gives more nuanced insights than just price trends. It looks at momentum and, crucially, the flow of capital, the money moving in or out. Let's break it down by time frame.
Okay, short term first.
Short-term rhythm. Trend has broken and is transitioning. Rhythm remains elevated but shows early signs of peaking. Funds flow is weakening.
Yeah.
Okay, trend is broken. The immediate up move is over. Transitioning, it's in flux.
Undecided direction.
Pretty much. Rhythm peaking, the energy is fading. And critically, funds flow is weakening. Less big money coming in, maybe more going out. This directly supports waiting before short-term buys. The internal dynamics are still weak.
Like an engine sputtering, even if the car is still rolling a bit.
Good analogy. Now, swing rhythm. Trend remains intact higher, but rhythm and funds flow are beginning to shift downward. Watch for the $42 pivot.
This is interesting.
How so?
A contradiction.
A divergence. The broader swing trend, weeks, months, is still technically up, but the immediate energy, the rhythm, and the money flow are weakening now. This makes $42 absolutely critical.
The pivot point.
Exactly. Will it hold there and bounce, proving the swing trend's strength? Or will it break down further? It's a moment of truth for that time frame.
Okay, and the midterm. This seems key for the longer outlook.
Midterm rhythm. Trend is merging, forming a base. Rhythm is in a consolidation phase. Funds flow shows a tightening pattern ahead of the next move. This is very significant. Forming a base reinforces the consolidation box idea, building a foundation.
Rhythm consolidating, energy coiling up.
Right. But the kicker is funds flow shows a tightening pattern. This is classic. It often means big money is quietly accumulating or distributing. You might see volume decrease overall, but maybe large orders are being filled subtly near support.
Like a spring compressing.
Exactly, building tension. Given JinLog's overall bullish view, this tightening strongly suggests potential for a powerful breakout upwards from this consolidation. The coiled spring is likely to release upwards.
So for you listening, understanding this rhythm and funds flow gives you a more forward-looking view. It helps you anticipate shifts in momentum rather than just reacting after the fact, feeling the market's underlying pulse.
That's a core part of JinLog's approach, that deeper insight, the fundamental underpinnings and external influences.
Okay. While the technicals are clearly central to JinLog's method, they don't ignore the fundamentals. The financial flow section dives into SMCI's numbers. What did the Q4 fiscal 25 results show?
Right, and the financials were, well, a mixed bag, which isn't uncommon for high-growth stocks. Revenue was up 8.5% year-over-year to $5.76 billion. Sounds okay, but it was slightly below consensus. And that highlights a key market reality. It's often less about the absolute number and more about how it compares to what analysts were expecting. Even decent growth can disappoint if expectations were higher.
The expectations game.
Yeah.
What about that big convertible debt issuance? $3 billion.
Yeah, that's a significant move. Issuing convertible debt bolsters their cash, gives them capital for growth, especially for those AI data center expansions JinLog focuses on.
Which costs a lot of money.
Exactly. But the flip side is potential dilution. If that debt gets converted into stock later, it increases the number of shares, which can reduce earnings per share for existing holders. It's a trade-off, growth capital now versus potential future dilution.
Okay, and profitability. EPS and margins.
Non-GAAP EPS was 34.1 cents, which also missed the $1.45 consensus another expectations miss. And gross margin compressed, down to 9.6%.
Why is gross margin important?
It shows how much profit they make on sales after the direct costs. A lower margin could signal tougher competition, rising costs, maybe selling more lower margin products. It's something to watch closely for future profitability.
So quite a few numbers there, and frankly, some misses. How does JinLog reconcile this mixed financial picture with the generally bullish midterm technical outlook? They seem a bit at odds.
That's a really important question, and it gets to the heart of how markets often work, especially in tech. How do you square these current financial misses with a bullish long-term view? The answer is often about looking forward.
Pricing and future potential.
Exactly. The market often anticipates future growth, especially in transformative sectors like AI. That convertible debt. Then maybe the market sees it less as a burden and more as a strategic investment in capturing massive future AI demand, even if it hurts current metrics a bit.
Investing in the future pie.
Right. And JinLog also points to an external valuation from Alpha Spread. They calculate an intrinsic value of $52.43 for SMCI.
Which is above the current price.
Right, suggesting it's trading maybe 11% below what Alpha Spread considers fair value. So, despite the recent misses, this independent fundamental analysis still sees value, which aligns with JinLog's midterm bullishness. It hints the market might be undervaluing the long-term AI story right now.
Okay, so the fundamentals provide context, but don't necessarily derail the longer-term technical view if the future growth story remains strong. Now, beyond the internal numbers, what about external factors? News, risks, events.
These provide crucial context. JinLog highlights CEO Charles Liang constantly emphasizing AI data center demand as a long-term growth driver. That's a powerful narrative, shaping how investors see the company as essential plumbing for the AI revolution.
The story matters. What about Wall Street analysts? Are they buying the story?
Interestingly, not uniformly, JinLog notes major brokers like JP Morgan, Wedbush, BofA have neutral or even underperform ratings, with price targets mostly between $35 and $43.
That's way below JinLog's outlook and the alpha spread value.
A significant divergence, and that itself is important. It shows there's disagreement among experts, which can fuel volatility. Different firms use different models, maybe focus more on the short-term risks like those margin pressures. JinLog likely sees this divergence as an opportunity, perhaps feeling the traditional analysts are missing the bigger AI picture.
So expert opinions are split. Any other narratives?
Seeking Alpha anticipates a H2 structural rally on AI supercycle tailwinds. That supports JinLog's bullish case, the idea of clearing that trap.
Framing the current consolidation as temporary.
Exactly. And CNBC data showed SMCI was up over 50% year-to-date, but still well below its 52-week high. That just screams volatility, big gains, sharp pullbacks, underscores the need for risk management.
And finally, there was news about expansion.
Yes, groundbreaking on a third California campus. That's tangible action. It signals real investment in expanding U.S. manufacturing capacity to meet that AI demand. It's concrete proof backing up the growth story.
So for you listening, it shows how you need to weave together CEO statements, analyst ratings, news headlines, actual operational moves. It's a complex picture.
A mosaic, yeah. Not just one piece tells the whole story. JinLog's method tries to integrate all of it.
Now, JinLog adds another layer, Elliott wave analysis. For listeners who aren't familiar, what is this tool, and what does it add to the SMCI picture here?
Elliott wave theory is, well, it's a fascinating and sometimes controversial technical tool. It suggests market prices move in specific repeating wave patterns.
Patterns reflecting.
Psychology.
Exactly. Reflecting the swings in investor psychology, the collective mood. It proposes these patterns, typically 5 waves up in a trend, 3 waves down in a correction, can help predict major market turns. It's like trying to map the market's emotional cycles. Okay, mapping the crowd's behavior through price waves. How does JinLog apply it to SMCI?
They apply it across time frames, and interestingly, the wave counts align quite well with the VPAR rhythm analysis, which adds some confluence.
Reinforcing the picture, so short-term wave.
Short-term wave. Currently in a corrective wave 2, rhythm remains subdued until the trap is fully cleared. Okay, in Elliott terms, wave 2 is a pullback after the initial impulse, wave 1. It often retraces some gains, volume might be lower, sentiment subdued.
Sounds exactly like the short-term rhythm analysis.
It fits perfectly. It suggests the current dip is a temporary correction within a bigger uptrend, but a strong recovery needs to break resistance, clear that trap.
A necessary pause before the next move. Swing wave.
Swing wave. Entering wave 3 impulse phase momentum could accelerate on clear support. Now, wave 3s in Elliott theory are usually the strongest, longest, most powerful part of the trend. It's when the trend really takes off and the broad market jumps in.
So potentially very bullish for the medium term.
Potentially, yes. A very bullish signal if it finds that clear support, linking back again to that crucial $42 MAC point. If it holds $42 and starts moving up strongly, Elliott wave suggests a powerful accelerating move could be starting.
Okay, and the longest time frame? The midterm wave.
Midterm wave. In a wave 2 consolidation formation stage that precedes the next major wave 3 uptrend toward prior highs. This ties directly into the consolidation box idea.
The big base building phase.
Exactly. This larger wave 2 is seen as the necessary foundation, the accumulation phase, before the next major wave 3 rally kicks in, the one targeting those old $122 highs or even beyond. It's the market laying the groundwork for a big long-term advance.
Wow, it really does seem to weave together the rhythm, the consolidation box, the Elliott waves, all telling a similar story across different time frames.
Right. The subdued short rhythm fits the short-term wave 2 correction. The tightening funds flow and base building fit the midterm wave 2 consolidation, setting up for a powerful midterm wave 3.
So for you listening, Elliott wave, while complex, offers another framework for trying to anticipate market turns and the potential size of moves based on these historical patterns of crowd behavior. Another tool in JinLog's comprehensive toolkit.
A way to read the market's psychological landscape, adding another layer of foresight. The social dimension, community sentiment and outlook.
Okay, this is pretty unique. JinLog actually includes a community flow section, looking at places like Reddit. Why look at online forums like r Supermicro or r Wall Street Bets for a serious investment analysis?
Well, it's about gauging retail sentiment, right? It might not reflect institutional thinking or deep fundamentals, but it gives you a raw look at retail investor psychology. It often highlights where speculative interest is intense, where debates are hot, and where short-term volatility might flare up because of herd behavior.
So it's like taking the emotional temperature of a part of the market.
Exactly. It's understanding the human element, which can definitely move prices, especially in the short term. JinLog looks at 2 specific communities here.
r Supermicro first.
On a Supermicro, the discussion is focused on AI data center capacity plans and campus expansion news. This suggests that this group, maybe more fundamentally focused, is digging into the actual business strategy, the long-term growth drivers.
They're talking about the company's real-world actions.
Right. Compare that to our Wall Street bets. There, users clash over buy the gap versus wait for further washout, highlighting short-term volatility concerns.
Classic Wall Street bets. High risk, high reward mentality.
Totally. You see that tension. Jump in now and buy the dip hoping for a quick bounce versus wait for an even bigger drop, a washout, before getting in. It's all about the immediate price actions, speculation, maybe squeeze potential. Less about the long-term fundamentals.
That contrast is really telling. One focused long-term, the other hyper short-term.
And that difference can create real tug-of-war pressure on the stock price in the short run. Lots of debate, lots of disagreement can mean higher volume, bigger swings as these different groups act on their beliefs.
So for you listening, monitoring this community chatter can give clues about potential short-term volatility and provides another lens on sentiment, which isn't always rational, but definitely influences the market.
It's another piece of the puzzle JinLog considers in their comprehensive view. Markets are people, after all. Overall outlook and key takeaways for the listener.
Okay, let's bring it all home. We've gone through the VPAR method, the charts, the financials, the news, Elliott waves, even Reddit chatter. Putting all these layers together, what's the overall synthesized outlook for SMCI, according to JinLog? And what are the big risks to keep front and center?
Right, the outlook section tries to balance everything. The core bullish case remains strong. AI data center demand and manufacturing ramp-up support a midterm base and eventual retest of $122. That's the engine, the fundamental tailwind of being a key player in AI infrastructure.
The big picture growth story.
Exactly. And the company's tangible expansion plans, like that new campus, back it up. Plus, the technical patterns, like that midterm Wave 2 consolidation setting up for Wave 3, point towards eventually challenging those old highs.
But investing is never risk-free. What's the counterargument? The bearish case or key risks?
JinLog is careful to outline those two, which is crucial for a balanced view, the risks. However, broader market corrections, mixed Q4 results, and lingering bearish ratings pose near-term risks.
Okay, break those down. Broader market correction.
That's systemic risk. Even if SMCI does everything right, if the whole market tanks, especially tech or the Nasdaq 100 it's correlated with, SLCI stock could get dragged down hard.
Mixed Q4 results.
That puts pressure on them to deliver better results, beat expectations going forward, to really win back full confidence after those misses.
And the bearish analyst ratings.
That shows skepticism from a chunk of the professional community. That can act as a headwind, maybe cap rallies if institutions use those ratings to rotate out. It highlights why JinLog's perspective, seeing opportunity despite this, is somewhat contrarian. JinLog's deep report also delves into specific scenarios around that convertible debt's potential impact and detailed box range outcomes.
It really feels like JinLog's method is about building a comprehensive case, looking at it from every angle, not just relying on one thing, truly alpha omega.
Absolutely. It's blending the technicals, rhythm, charts, waves with the fundamentals, financials, news, catalysts, all while keeping risk management front and center and trying to avoid those emotional gut reactions. And they always add that crucial disclaimer. All investment decisions are the sole responsibility of the investor.
Right. They provide the framework, the analysis, but the final call is yours.
It empowers you with incredible insight, but emphasizes your accountability. Outro.
Wow, what an incredibly detailed journey that was. We really went from understanding JinLog's unique VPA rhythm trading philosophy, that whole alpha omega market insight idea, all the way down to dissecting SMCI's every move, its technical setup, financials, the narratives around it.
Yeah, we saw how a systematic approach combining all these different tools really paints a much richer picture than just looking at one piece of data, and how it helps avoid those common pitfalls like overtrading or emotional decisions.
We definitely explored why recognizing things like consolidation phases matters, the significance of those MAC points as battlegrounds.
And how even subtle things like funds flow, the hidden money movement, or even that online community buzz all feed into building a robust investment thesis for different timeframes, seeing the whole tapestry.
So, as you, our listener, reflect on this deep dive, maybe think about what really stood out to you. How did seeing these multiple lenses, VPAR, Elliott wave, fundamentals, sentiment, all converge to build a case, even when Wall Street seems split? Could applying a similarly multi-layered, disciplined approach to other investments deepen your own market insights? Could it help you navigate this complex world with maybe a bit more clarity, confidence, and discipline?
Some powerful questions to consider.
Indeed. Thank you for joining us on the Deep Dive.